Hello everyone. Today is September 9th, 2020. As the US election is on the way, more and more people start worrying about what's going to happen after the election. I started getting questions like, is one specific party coming to power going to affect the stock market performance? Today, I'm going to illustrate what will happen after the election with just one slide. Before starting, please smash that reddish like button. Traditionally, Democrats were considered to play a big government role, collecting more taxes and giving out more profits. I heard a lot of people saying that's going to happen when Biden got elected. It would be bad for the economy and the stock market. On the other hand, the Republicans' policy will benefit the corporates, increasing their revenue and favoring for their growth. If Trump got elected again, the market will be boosted for another huge run. Well, is that true? This is a diagram about party leading the government versus S&P 500 annual growth, starting from President Hoover all the way till now. Let's focus on after the World War II. Since the market performance before that were affected too much by the Great Depression and the war. There are 12 presidents starting from Eisenhower. The best annual return obviously came from Democrats Clinton, over 18%. The cup of red or decrease happened during Republicans' time. Overall, it looks like stock market performed better when Democrats were in the White House. What happened there? This violates the traditional impression we just mentioned at the beginning of the video. Which opinion is wrong, or both? I'll give the conclusion first. The party in power doesn't really determine the performance of the stock market. Instead, the economic cycle is the main determining factor. Let's take a look at this historical S&P 500 graph. When Republicans Eisenhower was the president from 1952 to 1960, the Federal Reserve reasserted its independence from the US Treasury and kept increasing the interest rate, which led to 3 recessions in 1953, 1958, and 1960. Those red circles are a few months earlier, since we know stock market usually leads the economy. Democrats Kennedy and Johnson applied a series of measurements, most important of which is tax reduction. The Federal Reserve also cut interest rates. Together, this prevents further recession, revived the economy, and boosted the stock market. Does this sound familiar? This is a similar measurement that Trump had been using after he took over the throne from Obama. Now let's see what's the consequence of that. When the Republicans' Richard Nixon was in power, he was facing rising inflation, and meanwhile he had to close the budget deficits for the Vietnamese War. The economy kept going down. He chose to freeze the wages and prices. The market recovered a little bit, but took a huge dive when oil crisis occurred in 1973. These were illustrated by the 4 green cycles. Then, the Federal Reserve chairman determined to lower the interest rate, which ended the economy recession. However, the following high inflation rates forced his successor to increase the interest rate in late 1980 and kept the cycle on. Since the 1980s, Federal Reserve has been more and more skillful controlling the economy with their monetary policy. We don't see a lot of sharp crashes like before, except for the Iran crisis, 1981-1982, and the 1987 panic sell for 4 days. Then it's Clinton's time, so-called golden age. Fairly low inflation rate, nice economy, but it was also a bubbling period. Eventually, the stock market crashed again. The 2 big crashes after year 2000 are both new areas that have never been explored: high tech and financial derivatives. Even the Federal Reserve didn't have much experience dealing with them. Thus, their reaction wasn't fast enough and wasn't as effective. Since Obama came into power, U.S. had been trying to keep a low inflation rate and improve the liquidity to keep the market happy, but it's still the same cycle. The question is when the bubble is going to burst this time. If there's no war or another unexpected hit like COVID, then most likely this is going to happen when the Federal Reserve decides to increase interest rate due to high inflation. They usually target 2% inflation as a healthy number. The more it deviates from 2, the more likely Federal Reserve is going to make the movement. So in summary, from the historical analysis, we can see the action Federal Reserve takes is the really determining factor for the stock market. The most important thing is never about which party came into the White House. It's the current economy which decides Federal Reserve's movement. One more take-home point. On August 27th, Federal Reserve had a meeting. They updated their inflation rate target. It used to be 2, now above 2. The content for that meeting is enough for a separate video, but the quick conclusion we could draw is the support from Federal Reserve is going to be there. More money will be printed if necessary. Okay, before you go, if you find the video is helpful for you, please like, subscribe, and share the video. If you would like to receive notification on the most recent updates, please click the bell image. See you next time.